And good evening. We're doing it live right here, weeknights in the 5 o'clock hour in the heart of drive time in Los Angeles. Mottek On Money 5 nights a week for you, live on the air right here on 790 KABC, streaming live online worldwide for you at KABC.com, and, of course, the on-demand Mottek On Money podcast at KABC.com, Apple, iTunes, and all your favorite podcast platforms. Well, we're kicking off the week with a bit of a breather for stocks coming off the high points of the year. Today, with the Dow pulling back 41 points, the S&P 500 down 25, the NASDAQ down 119 points. We did see bond yields rise again. Those are the ones that impact the fixed-rate mortgage rates out there. And the yield in the 10-year note, for example, moved up to 4.25%. Oil has hit a two-week low despite the latest military action in the Middle East, including action involving the U.S. Navy over the weekend. The Dow the barrel of oil down $1.03 to 73 and change. Gold making news today, hitting a record high at $2,152.30 an ounce, settled down about $47 to $2,042 an ounce. And Bitcoin making news again, popping above 40,000. Right now pulling back a bit, about $100 to 40,670, moved above 41,000 during the trading day today. We'll talk about all of that shortly with money manager Ken Winans. We'll also be watching what's happening in the Middle East. That news of ballistic missiles fired by Yemen's Houthi rebels striking 3 commercial ships over the weekend in the Red Sea, while a U.S. warship shot down 3 drones in self-defense during the hours-long assault, according to the Pentagon. We're also watching the latest military action in Israel following the Hamas attack on southern Israel on October 7th. Bobby CHACON will be joining us, a veteran FBI special agent and attorney who is a counterterrorism expert, also watching the rise in anti-Semitic violence here in the U.S. following the October 7th Hamas terror attacks on Israel. Bobby CHACON will be joining me live later this hour. Also this hour, I'll be speaking with a giant on the Southern California business scene, Glenn STEARNS, founder of STEARNS Lending, star of Discovery Channel's show Undercover Billionaire, a rags to riches story. Among other things, he built up a startup from scratch while overcoming many challenges. Glenn STEARNS will be joining me live later this hour. But first, on your money, the markets and the economy. Joining us live now, Ken Winans, money manager and president of Winans Investments, author of Investment Atlas 1 and 2, and yes, Forbes magazine contributor. Ken Winans, thank you very much for joining us live here to kick off the new week with gold and Bitcoin making news. Let's start there, Ken, and give us your reaction to these big moves here.
Frank, there's a couple of strange bedfellows right there, gold and Bitcoin. Who would have ever guessed back in the heyday when Bitcoin was roaring ahead, hitting 60,000 per coin, that we would ever be putting those two in place? But it is the year, I'm writing my new Forbes piece. The title, I'm trying to get it approved, is called The Great Dead Cat Bounces of 2023. And what I mean by that is these are recovery rallies in what had been a devastating hit in 2022. But to be honest with you, I am not 100% sold that this is a new bull market in any of these things. Simply put, the Fed is still taking away the punch bowl. We are still dealing with headwinds in the economy. And I find that bull markets don't start on that. They don't necessarily have to have the punch bowl full, but you don't have the punch bowl away from the table. So we'll have a lot to cover tonight. But the good news is I think everybody's relieved that at least the Santa Claus rally that started after that dreadful October really carried us through November. December is good. You're seeing the overall breadth of the market improving, meaning that a lot of stocks that had not been participating in the rally earlier this year are coming to the party. That's all very positive. But as I said, we still have a long ways to go to determine the future, especially with what will probably be a very volatile election season next year.
Very well said. On the air live with money manager Ken Winans, and it looked like the Fed chair last week already started trying to push that punch bowl away from the party that had sent the Dow and the other major averages to the highs of 2023. The Fed chair called talk of cutting rates premature. What do you think he's trying to signal here in his latest comments, and what does that mean for the markets here now?
You know, it's a tough one, only that I mean that we have gotten used to, and I guess we're all still going through this recalibration in our investment brains of how to deal with the post-Goldilocks era of the last 30-plus years And what do we do when you no longer have the Fed keeping pedal to the metal and just pumping money into the economy? And I think what Jerome Powell's trying to do, he's actually trying to be a great educator. And he's trying to basically explain to everybody that, look, the Fed is not going to make these quick pivoting nanosecond type turns. The Fed will follow a policy based on what's happening with employment and inflation, which is their only mandate. I know everybody thinks they're somehow tied to the Treasury Department. They are not. They're supposed to be independent. And so I think that he's just simply saying that, that we should just get used to that the rates are not going to go up from here, but rates are certainly not going to drop dramatically next year. And Frank, to be perfectly honest, we don't want that. If we have the Fed suddenly having to reverse course, that means we've gone into a horrible slowdown in the economy, and none of us want that. It's better to have rates stable, have banks and mortgage companies and anybody else lending money now comfortable enough to expand private credit. But we're in one of those kind of influx periods where we'll see how it plays out. But I would just say this. I think that everybody should begin to think through, as you have a wonderful rally in this holiday season, but begin to plan out your 2024. And that means, how are you going to reallocate your portfolio to match the realities next year? And I think that turning your back on it, hoping things are going to go back to what they were before the COVID crisis, is not a smart investment strategy.
On the air live with Ken Winans, and it should be noted, Fed Chair Powell himself is not an economist. He's an attorney, right? So we are getting a different view of things than what we've seen in the past from previous Fed chairs. Now, what about gold and Bitcoin? Getting back to that for just a moment, is the rally in gold over here? We did see that sell-off today after gold kissed a record high, and I'll repeat it, at 2,152.30. That was the record high intraday price for gold, settling at 2,042 an ounce. Bitcoin with that big run-up, but still well off its all-time high, Ken. Should be noted, you mentioned the all-time high was above 60K. Right now it's hovering just below 41,000. Where do you see those two go from here?
Well, here's the thing. I think it's great that we're investing and looking at things outside the box. But let me expand the discussion. And it's another article that I'm thinking about writing on just Frank, and I bring it up, is that I'm still astounded that my industry has done such a absolute piss poor job of educating people on commodities in general. And what I mean by that is, I'm not saying that they're suitable for everybody, but I do think people should at least be aware that there are investments that have been around for hundreds of years with normal market activity. You can open up an account at Schwab, Interactive Brokers, and trade these things if you are somebody who's suitable for it. But let me just rattle off a couple of numbers. So here we have Bitcoin that's roughly 25% off of its all-time high since 2020. Remember, we have to go back to 2022 to find these highs. In that same time frame, corn is now, as of today, 67% above where it started in 2022. Orange juice is 181% above where it was in 2022. Cattle, 31. Sugar, 19. Gold, 10. Here's my point. I'm not saying don't do alts. I'm not saying don't do Bitcoin. But I would encourage everybody to realize there's a lot of commodities out there that I think people should begin to allocate more and more of their money toward these things, because inflation is not going to disappear. It is a multi-year phenomenon. And then when you throw on top of it the simple fact that as rates go up and we have all these various agencies need to refinance their debt, especially in California and the U.S. Treasury, you're going to have, in some cases, taxes going up. I think that is going to raise inflation because people are going to need more wages to pay their bills. It's just not going away, Frank. So why not go into the area that typically does well when you have a global inflation spike? That's the only thing I'm trying to bring up. There's areas you can go into. And you talked about gold just a moment ago. Well, gold is historically does very well in the month of December and typically does very, very well in the months of January and February. Then it has issues. Here's another little interesting thing that I was very surprised to find out. The U.S. dollar, 61% of the time, loses money against foreign currencies during the month of December. I can't tell you why. I just know I've ran these studies back 25 years. That's the tendency. So if you see the dollar inverse to Bitcoin, it actually could add some logical thought of why Bitcoin is doing so well during this time of year.
On the air live with money manager and market historian Ken Winans, and it should be noted, we are seeing the price of oil dip despite the upheaval in the Middle East. It's at a 2-week low now, down to around 73 in change. What do you see ahead here for oil, given all of these wild cards out there, Ken?
You know, again, if we're just going to put history in the driver's seat, we're going to look at market or certainly seasonality of the year, we realize that when you have an oil refinery anywhere in the world, they have to plan ahead. It is not unusual during the winter time. They're changing the grade of the fuels they use. They call it a winter blend because of certainly the air quality. We have that in California. They don't produce as much of it as they do the summer blend. You have all these things that go into oil and natural gas production. So it's not a surprise to me that, we're in a period of time during the year when oil demand is typically down, oil is down. I think it's a bit like just trying to get a beat of what to expect right now. But I know for a simple fact that crude oil during this time of year, typically, it only has, I'm looking at it right now, it's barely 50-50 on whether it goes up or down in the month of December. So that's hardly anything that I would jump into. What I would keep a very close eye on, though, what's near and dear to all of us, especially any of us in California, is natural gas. If we start having cold weather, I think you could see natural gas prices really spike. None of us are going to be happy with our utility bills, but it's the nature of the beast. Now, right now, it seems like the production of natural gas is about moderate. They're not expecting a real cold winter. But I was up in Lake Tahoe over last weekend, and I'll tell you, maybe the snow might be a little light, but it was cold up there. And so I don't necessarily think it's going to be an uncold winter, which means that we could see that commodity go up in price. But, Frank, I would just final point on all this. I think as we finish up the Santa Claus rally, we want to start really getting ahead of the curve about what January earnings are going to look like. Please don't forget, January sets the tone for the year. It did it this year. It's going to do it next year. You have Fed announcements, corporate earnings, Treasury announcements on money and debt that they're going to need to take on. Every central banker around the world makes a comment about things. So it's a very intensive time. So everybody should be asking, what if it's a good January? What's a bad January? And what am I going to do as an individual investor?
We're all juggling life, a career, and trying to build a little bit of wealth. The Brown Ambition podcast with host Mandy and Tiffany the Budgetnista can help.
Ultimately, I'm not expecting that you know how to do everything, but I am expecting that you are willing to learn.
You can't be in the passenger seat when it comes to your career.
No.
You can't expect your manager to teach you every single thing. If you're falling behind in a skill, like finding a way to get caught up without just telling your boss, like, I don't get it.
Brown Ambition.
Wherever you listen.
All right, we're heading into 2024, which, of course, is also a presidential election year. You might have noticed this, Ken, the market rallied right around the time that New York Times poll came out showing President Trump would defeat President Biden if the election were held, about a month or two ago when that rally started. What about the political aspect of all of this, which you mentioned at the very beginning?
I think we better strap on our seat belts. And I'm talking about not the twosie, but the foursy like they have in aircraft, in the fighter planes. I think it's going to be a very interesting year. The number one thing, if any of your audience was to call me, what I am the most concerned with is if the Trump tax cuts, for lack of a better term, the ones that were put in place in 2017, expire early next year, and the IRS is one of these lovely deals where they make it retroactive. You're raising taxes at the exact wrong time because the economy, certainly with the inflation issues, will not be overly strong enough to absorb that. So I'm more concerned about what goes on in Congress because I think Congress won't, basically they will extend those tax cuts if we have the status quo. But if you have an upset in Congress and they decide to repeal all those, I think it could really cause some economic problems going forward. And unfortunately, I think the state governments would also follow suit on raising individual taxes there. But, Frank, election years, it's one of the reasons the Fed did what they did this year. They do not want to be caught in the crossfire of the political fray next year. Like everybody else on the planet, they want to keep their jobs. The Fed governors don't want to be accused of exerting influence in a political cycle. But it's not a surprise that as I travel to Nevada, which I was there over the weekend, and I go to Utah, I go to what I call the western states. President Trump still has tremendous pull. You see flags everywhere. You might not see him in California, but you sure do see him in our neighboring states.
The other big story today, Ken, according to the National Association of Business Economics, this is the group that puts out the assessments on recessions, the one that calls the recessions. They say the U.S. economy, which is on pace to grow 5.2% in the third quarter, based on that number we got last week, is heading for a sharp slowdown next year, according to the nation's leading economists, all part of the National Association of Business Economics. What's your reaction to that big news here, and what is your outlook here? It's curious that the market is rallying ahead of that kind of an assessment.
Well, here's the thing. It's a term I brought up many, many times on your show, Frank, which in your show is one of the few that really leaves everything open to the table, so to speak. The term stagflation. And I'm really amazed when I talk to even older people who were alive in the 70s, forget. It is that you have nominal economic growth, but after you factor in the inflation element, you actually have negative real growth. I think we're going to be living with that for many, many years to come. I don't think we're going to have, and I'm talking about globally. I mean, anybody thinking that anywhere else in the world has got a better handle on what's going on than we do, I would tell them, go talk to people who live in that country. I mean, clearly there's a lot of upheaval, certainly in South America, Central America, Asia. Everybody's dealing with their issues. But with that being said, stagflation means that we're not going to have any net real growth. I believe that will continue into next year. Now, if we see a drop in certain segments of the economy in negative growth, I think it's going to be very industry specific to certain areas, kind of like real estate. Some areas in real estate will do okay. Other areas will not. I think that's just the way the economy is going to be going forward. It's not in aggregate, all going up, all going down. It's a hodgepodge of ups and downs and groups switching around during those times. But as I said, you really need to watch corporate earnings going into fourth quarter and the guidance those companies give for 2024. That's going to be the telltale sign of where we're really at. I would just finish on one final thing. It's the strength of the dollar. If the dollar decides to take off, that causes problems on exporting. As long as the dollar is within this range that it's in, everybody's used to it in this range, we'll be fine. I think that companies that have got a good beat on what they have to do will be fine. Others that are still struggling to grasp with the post-COVID world will continue to struggle.
All right, and last but not least, any final thoughts here on where you are putting money now and or taking it off the table?
Well, I mean, it might be a little late to bring this up, but I do constantly find that people are overexposed to tech and underexposed to other groups. I noticed today, for instance, Google is beginning to act toppy, as we call it. I think a lot of the techs are that way. I find that people are grossly underexposed to retail, which I find very interesting since Amazon, to me, is a giant retailer. I think the holiday season is still going to be overall quite good. I don't know if anybody's gone shopping lately, but the malls are full, and they're trying to. The retailers have done a good job with inventory control. I would take a good hard look at big retailers. If you don't like trying to pick a spot, then buy an ETF that's a retailer, which is, I think it's XRT, if I remember right, which is strictly retail. You're playing into a Santa Claus rally. Retail typically do well if you're looking for something as a quick pop between now and mid-January.
All right, terrific, Ken. Thank you very much. We'll let you get out there and get some shopping done this evening and let you off the hook here now. Thank you very much for that thorough assessment of things. We always appreciate it. We'll be looking forward to your next article in Forbes magazine. That is money manager Ken WINANS, president of WINANS Investments, author of Investment Atlas 1 and 2, and also Forbes magazine contributor. Ken, have a wonderful evening, and thanks again for taking the call.
My pleasure, Frank. Good night now.
Thanks very much. We'll see where the action was on Wall Street in just a moment. Friends, people like you and me have our ear to the ground in all things business. We like to be informed and well prepared. As important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, but even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. Put it in your phone right now, so if you're hurt in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Be it motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it, the number to call 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. 790 KBC welcomes. Want to take a guess? Yep, Peter Frampton coming to the Greek Theater April 13th. Tickets are on sale this Friday, Ticketmaster.com. And right now, caller 9 wins at 1-888-790-5222. Get a pair of tickets to the show. If you're caller 9, call right now, 1-888-790-5222. Mottek On Money continues here in 790 KBC. Stocks pulling back from the high watermark so far seen in 2023. The Dow down 41 points at the bell today at 36,204. The S&P 500 down 24 at 4,570. And the NASDAQ down 120 at 14,185. The yield of the 10-year note ticking a bit higher to 4.25%. We see oil at a 2-week low, down $1.03 today at $73.04 a barrel. We're seeing prices holding fairly steady now at Southern California gas pumps. It was just about a week or so ago that regular dipped below $5 a gallon on average. $4.91 now, the average price for regular. So if you see that or something lower, you're getting a good deal. A lot of stations are charging more than that. $5.27, the average price for premium here in the L.A. area, and $5.85 now, the average price for diesel. Bitcoin in focus, getting a pop, hitting a new high point for the year today, but pulling back now, down $1.13 at 40,670. Ethereum up 17 at 2,252, and Doge now at 9 cents. Big merger deal in the airline business with Alaska Air Group announcing a deal over the weekend to buy Hawaiian Air for about $1.9 billion. Under that deal, Alaska Air will pay $18 share in cash while taking out about $900 million in Hawaiian Air's net debt. The price equal to a 270% premium over Hawaiian Air's closing price Friday of $486. We see Alaska Air shares pulling back about 14%. Hawaiian Holdings shares soaring nearly 200% to $14.22. Mottek On Money continues here in 790 KBC. Turning now to the Middle East, day 60 of the war between Israel and Hamas following the terror attack on Israel on October 7th. We're watching the latest reports with intense Israeli airstrikes hitting the south of the Gaza Strip today. Israeli troops and tanks also pressing their ground campaign against Hamas militants in the south of the enclave after having largely gained control of the now devastated north. Meanwhile, ballistic missiles fired by Yemen's Houthi rebels, backed by Iran, struck 3 commercial ships over the weekend in the Red Sea, while a U.S. warship shot down 3 drones in self-defense during the hours-long assault, according to the Pentagon. Joining us live now is Bobby Chacon, a veteran FBI special agent and attorney, an expert on criminal and counterterrorism investigations, also following the rise in anti-Semitic violence here in the U.S. following the October 7th Hamas terror attacks in Israel. Bobby Chacon, thank you very much for joining us live here this evening. Give us your reaction to the latest news here tonight.
Well, I mean, my reaction is it's good. The war is progressing. I mean, the faster that Israel can take those large parts of the south, the better, because the quicker this thing comes to an end, the lesser amount of collateral damage with other civilians being injured and killed. So I think that it's good, and I don't expect it to end without, some last gasps, like you just mentioned in Yemen, the Houthi rebels starting to launch some rockets into the Red Sea. I expect more of that kind of warfare from some of the friends of Hamas. As Hamas is squeezed tighter and tighter, Israel's done a great job, I think, at the ground offensive and in being patient and strategic and surgical in their operations.
On there live with Bobby Chacon. And what about the U.S. military installations that have been targeted, as well as our ships being targeted by apparently Iranian-backed militia in the region?
Yeah, that's a tough one. I mean, it shouldn't be. The administration has to define its response and our role in this. They have to be strong, in their reaction. I think, obviously, in my opinion, whenever a U.S. warship is fired upon, it should take a quick and definitive action against the attacker. So I don't know that that's been done in this case, but we should not certainly allow all warships to come into fire without the appropriate overwhelming response.
Since you're an expert in all of this, we heard over the weekend, according to the Times of Israel, Israel is determined to kill Hamas's leaders in every location in the world, not only in Gaza, but Qatar, Turkey, and Lebanon, even if it takes...
Former Navy SEAL Mike Ritland keeps it real on the Mike Drop podcast.
Ladies and gentlemen, welcome to the stage, Rudy Reyes.
The ethics of martial arts is why I joined the Marine Corps. I never thought I was going to join the military because I'd been around so much gun violence, and I wanted to be the antithesis of that. I loved fighting hand-to-hand. It's fair. You don't have to kill your opponent. You can beat them with ability and skill.
Mike Drop. Raw, unfiltered, intellectually sound, wherever you listen.
Many years, we heard from the Shin Bet chief, the Israeli intelligence chief, over the weekend.
Yeah, well, look, we remember, at least in my lifetime, we had the Munich Olympics where 11 Israeli athletes and coaches were murdered brutally. And if you look at the Israeli response, it did take years, and they were patient. And Mossad took years in tracking down every single person that was responsible. October 7th was much worse than the 1972 Munich attacks. And so I have no doubt that the Israeli intelligence service and the counterterrorism forces have the patience and have the wherewithal to engage in this years-long seeking out and destroying everyone that was involved in these attacks on October 7th. Now, it will be more difficult because some of these people are billionaires living in Qatar and places like that, and so they have certain protections by other states and other state actors. But I have no doubt of Israel's resolve to do this. I have no doubt in their abilities to do this. And like I said, we've seen them do this before. We've seen their patience and take years to track down people who are, by the way, hell-bent on destroying Israel and almost every Jewish life on earth.
And we have this heartbreaking situation with the hostages still being held in Gaza. Let me draw on your expertise on that. How do you think this will be resolved? We did have some hostages released recently as part of that exchange deal and that ceasefire that ended on Friday. How do you expect these hostages to be recovered?
That's always a difficult situation when you're dealing with hostages. We don't know the horrors that even the released hostages, now that thankful they're home, but we don't know what they went through yet. It hasn't come out, and as far as the prisoner exchanges, those are always, the last resort, because as we know now, the person that masterminded the October 7th attacks was part of a prisoner exchange years ago in another hostage situation. And so, you don't know who you're letting go. But in this case, I think because Israel said, we're gonna do a prisoner exchange or whatever, they know they're going to hunt down even those that they just released. And every member of Hamas, should be taken out, and everyone certainly that was involved in the carrying out of the planning of the October 7th attacks will be hunted down. So I think it's tough because you do have, some they're exploiting the hostages, they're manipulating, and that is Hamas is exploiting the situation and having those hostages. But I think Israel is being very careful. They're going to work hard to get them released as they've done with the hostages so far. But Hamas knows, the minute they have no more hostages, they also have no more bargaining chips. And so I think you hit on the most sensitive part of this whole thing going forward is how we deal with the remaining hostages. And that's an intelligence operation. That's Israel intelligence finding out where they are, what condition they're in, if they're still alive, and then either try to surgically attack and get them out and rescue them, or make the final deal to get the rest of them released and then continue with the ground offensive.
Excellent assessment there. And let me ask you about another important point here. We heard recently from the FBI director himself, Christopher Wray, warning that anti-Semitism in the U.S. is reaching historic levels, in his words, in the wake of the violence in Israel and Gaza following the terror attack on Israel by Hamas. Of course, police here are in full alert, not only here but across the country, for in the face of what's been happening on college campuses and elsewhere. What about what the FBI director warned us about just recently?
Well, it was good to hear because up until now I wasn't sure the FBI was focused on the proper thing. But, it's nice. It was nice to hear because, I work in Hollywood. I'm a screenwriter now. And for the first time in my life here in L.A., and I've been here since 2003, friends of mine who are Jewish in Hollywood have spoken out to me about how they're afraid to show that they're Jewish, to go to a temple, to do the other things that might, show them out to be Jewish. And that's a shame because, our freedoms here are based on freedom of religion is one of the most sacrosanct things that we have in this country. And so then now you have people that are afraid to practice their religion openly. And so I think that the FBI has to do this. They have to come out strong. And the U.S. Attorney's Office and the Justice Department really has to prosecute and make examples of anybody that's carrying out violence, anti-Semitic violence. We can't let them go with slap on the wrist. They don't respond to that. And anybody that's speaking out, hate crimes need to be charged, and prosecutions need to be vigorous, and penalties need to be applied, in the strongest terms, because this is, religious violence. It can spread like a cancer. We've seen it happen across the Middle East. We see it happening in Europe. And if we let it go here, if we let it fester here, it will turn into a full-on attack on our religious liberties, and we can't allow that. So the FBI, working with the Justice Department, needs to make examples of some of these people that are in the early stages of carrying out some of this anti-Semitic violence.
Certainly will. Wish we had more time, but a lot of questions being raised about some of the response to these situations. A lot of the comments, where are the police in many of these situations that are happening out there? And I hope to speak with you again as we follow all these developments closely. Bobby CHACON, veteran FBI special agent and attorney based here in Southern California, expert in criminal and counterterrorism investigations. Thank you very much for joining us live here tonight.
Thanks for having me.
Thank you very much. Mottek On Money continues here in 790 KABC. Good evening. Joining us now, a giant on the Southern California business scene, Glenn Stearns, founder of Stearns Lending, star of the Discovery Channel show Undercover Billionaire, rags to riches story. Among other things, he built a startup company from scratch while overcoming many challenges. These days, he's the founder and CEO of Kind Lending, based in Orange County. Glenn Stearns, thank you very much for taking the call live with us here this evening.
Yeah, how you doing, Frank?
Fantastic. It's been a while since we've chatted behind live microphones. It's so wonderful to reconnect with you here. Give us your view of things here at the moment and what you've been up to these days.
Wow. Well, as far as the mortgage banking world, I mean, we're finally getting a little relief. So that's been, a little over 30 months of getting pounded. So, it's a nice little holiday surprise. So we're all pretty excited about that. And then as far as everything else, I've just been keeping busy. After doing the show, I really kind of took it low, and then it got me motivated to go jump back in and start another company. So we've been doing this for, about 3 years now and loving it. So
congratulations. We want to draw on your, 30-plus years of experience in the mortgage business. You're right, rates have pulled back from that 23-year high recently, and looks like activity starting to pick up again. Tomorrow we'll be getting the new CoreLogic numbers out on home prices, which have held up in the face of these higher rates, right? What do you see ahead for mortgage rates and on home prices here in Southern California?
Well, I think, something's had to give, right? I mean, it's hard to have both high home prices and high rates and think that we're going to be able to move any property. So I think we're starting to see the correction in both, not only in the price of homes, but obviously in the rates right now. So I think affordability is coming back, and we're looking forward to 2024. I think it's going to be a lot better year than what we were predicting earlier. So we're excited.
That's encouraging. And among the movers and shakers you talked to there in the OC, which has always had a rather impressive low unemployment rate, and things seem to always be humming there in the OC. What's the mood there as we head into 2024?
Again, it's been great. I had, after I had sold my business last time, I kind of took a hiatus, went over to Jackson Hole, and when I began the business again, I thought, wow, there's no place better than come back to Orange County and kind of go after that employee base. There's a lot of wonderful people out here, and so we've been hiring and it's, especially in the last month or two, we've been rehiring again a lot of people, and so we're excited about what the future holds for us here.
That's terrific. Well, and you have an amazing story, and a lot of fans, certainly. What you've achieved in your life is absolutely amazing. How did you get into all of this? And obviously, you have the entrepreneurial bug, unlike many others here. Maybe you can share how you got started and where you are at this point in your illustrious career.
Sure. Well, I grew up in Maryland, came out right after college. I was sitting on a bench over the Pacific Ocean there in Corona del Mar, saw a man working in his yard and got excited. I thought, man, I want to do this. That's my life. I want to have these beautiful homes or beautiful cars. And I walked up to him. I said, what did it take to get this house? And the guy says, Senor, I'm the gardener. So he said, I think the man's in real estate. And I said, all right, I'm going to get into real estate. And that was 1988. And so I jumped into mortgage banking. I didn't have a clue what I was doing, but I started as a loan officer. And 10 months later, I started my own mortgage brokerage company, and we grew that into a mortgage bank, went through the crisis in 2007 and 8, and while everybody was really distracted, we grew and became the number one wholesale company in the country, mortgage banker. And, it was a lot of insanity because I came from, I had a child when I was 14. I had failed fourth grade. I didn't have a lot of mentors around me. And when I finally, came to California, that's when I surrounded myself with a lot of the big icons out here, a lot of the people that had built Southern California. And I just walked up to them. I said, hey, I'd love to go to lunch with you, pick your brain. And people like George Argyros and people like, we had so many great ones back in the day. I'm thinking General Lyon, a lot of great people that kind of helped me get my start and believed in me. And so, I ended up trudging through the 90s and 2000s. Like I said, took advantage of the crisis when everybody else was distracted. And it's been a wonderful ride.
That is fantastic. Certainly, you've been through, went through the financial crisis and being celebrated as a terrific entrepreneur on the Discovery Channel show that you had, Undercover Billionaire as well, and created another startup from scratch. So now you're the CEO and founder of Kind Lending. What's the website on that one?
Well, that's kindlending.com. And speaking of the show, it's funny, be careful what you wish for, right? I had a lot of people asking me to do a show, and I kept saying no. And then I said, well, I'll tell you, I'll do a show. It's just put me anywhere in this country with no money, no contacts, and I bet I could rebuild a business from scratch. And they go, okay. And I went, oh, no, now what do I do? And I did it, and it turned out to be, one of Discovery's, highest-rated shows, and so it worked out real well. And that led me to go, all right, I'm going to do it again for real. And so Kind Lending came about after that. So
that's terrific, Glenn. Well, thanks very much for sharing your great story with us. It's wonderful to reconnect with you. Love to have you on from time to time to get your view of things here. We wish you and your wonderful family all the very best for the holiday season, and thank you very much for joining us live here tonight.
All right, great talking to you, Frank. Happy holidays.
Likewise, Glenn Stearns, the founder and CEO of Kind Lending, based here in Southern California. This is Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with our legal eagle, Royal Oaks, coming your way next right here on 790 KBC.
Stacking Benjamins with Joe and his good friend OG not only has great financial insight, it's laid back with humor too.
Joe talks with Stacking Deeds co-host Crystal Hammond.
I've always been a fan of nosy neighbors. I want nosy neighbors. They can tell you what's going on 10 times faster than you would know.
Again, what's she talking about, Doug?
Really?
We're repairing neighborhoods, but then we're into nosy neighbors, and I built a career off of that.
Find out more by searching the Stacking Benjamins podcast, wherever you listen.